Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Friday, March the 5th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. This is a subscription service. Each morning we come together to take a look at the market, look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. I'll put the contact info up in just a minute. If you're interested in coming in and checking us out. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trade advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to come in and check us out, send me an email at quantumleapfutures@gmail.com. You will need Skype. It's easy to open up and it's free. Send me a Skype request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you like this video, there's over 300 days of these videos up on YouTube. You can check it out, check our how our hypotheses played out each day. Just do a search for Quantum Leap Futures. And if you like what we do, please follow me on Twitter at Crazy2. It's not a commercial venture. There's no website. There's no blog. We just come in and do this live session each morning, and then we do live trading and analysis during the trading hours. Okay, so yesterday, the main hypothesis was to come down into this 74 to 67, 69 area, find buyers, and then grind our way up into the next big target above. We had that naked close, we had the naked VPOC, and we had the microcomposite VPOC as the next big target up here at 87.25. And then we were looking for resistance to come in at the key line in the sand at 91.75. Played out beautifully. What I didn't do is trade it very well because they sucked everybody in. They sucked the shorts in with this double bottom on the developing IB with a inverted cup and handle. So I actually was short from 76.75. I finally dumped that out at 80.25, and I got long with the break above 82 at 82.25, and then I was able to ride it up. But I didn't trade the first part of the day very well because I got caught in that one short. But there's the difference between having a good hypothesis and not trading it very well. But I know a lot of people got caught with this. I mean, this was a beautiful setup. You had the 83% probability of the double bottom on the IB. You had the naked VPOC, the microcomposite VPOC, down here at 74.25 and 74.50. For all intents and purposes, it should have broke, and it didn't. That's where we know that doesn't matter how high the probability is. There's always that 50-50 that next trade is going to fall in the other side of that probability. Even when you've got as high of 83%, you still got 17% that can fall in the other direction, and that's what happened. We created a triple distribution day yesterday. A lot of accumulation down here, obviously, and we stalled out at 91. Our next big target above was the 95, 96 area. That's our weekly ATR target for the full session. We did hit that overnight. Non-farm came out. Our non-farm payroll number is 1994, so write that in your journal. We popped up into the 2002, and now we've come back down and returned to the scene of the crime and coming down to test lower right now. Look at that. We did end up rolling over and rejecting that 94. So they came down, rotated it back up to the scene of the crime, and then the sellers stepped in again and moving it down. Very interesting. Okay, let's get going with our normal routine. I just like to go through some basics each morning. I do this. You don't have to do it, but I don't change my routine I start with a simple candlestick chart. Always on all my charts, I use a 9 EMA and a 20 SMA. I don't use them to trade. I do have a couple setups that are based on them, like the FUBAR Mr. Sneaky Tech Gap. But what I'm doing is I'm looking for slope and separation and where we are in terms of the trend in the different time frames. I also have a study called Naked Crosses, and we won't get into that right now. So on the monthly, we've had this beautiful upward trend. August and September, they violated the trend. October and November, they took the trend back. And then December, they challenged it. And so far this year, we've come down and violated the upward trend on the monthly. We are now coming back and testing it at the 9 EMA, but we haven't got above yet. Going to the weekly, we had this downward trend starting, and we violated it. Now we're testing the upper, the 20 SMA. We do have this naked cross right here at 2008 and a quarter. That's when we've been saying that it was likely to be tested before we get the bigger downturn, and you can see we're coming up into it. On the weekly. It is on the weekly, so always keep in mind time frames. But the downward trend is being violated right now on the weekly. Let me get rid of the open interest here. On the daily, we have a nice trend starting. We got good slope and separation, so the trend on the daily is up. On the 4-hour, same thing. We've had trend up, consolidation, continuation, consolidation, continuation. We are seeing a little bit of a lack of slope and separation up here at the top. So we could be possibly getting ready to challenge this if we break below this 87 area, and I'll show you why. It's the 9 EMA, but it's also a structurally important area. It's our overnight low to boot. We're likely to come down to test the 1980s below, but the trend is still intact. It's just being challenged right now. On the 1 hour, it is being violated right now. We have a possible topping pattern setting up here, bearish engulfing with a shooting inverted hammer, I should say. So just we are seeing a little bit of weakness here, so we could retrace down. We made a big move, and this could be a turning point to come down. There is this naked cross down here on the 30-minute at the 81, 82 area. 82 was critical. Remember, we kept on banging against that 82 CLVN, on the way up. So it could offer support, and we should return to it based on this naked cross right here. Excuse me. Going to the 15-minute, so the trend itself is being challenged right now on the 30-minute. On the 15-minute, we've broken below the 9 and the 20, so we've violated the upward trend. There's the naked cross right here as well, down at the 79.50 area. The 5-minute, you got your volume spike and basically FUBAR, and we've rolled over, and now we're getting the start of a downward trend. There is a naked cross that we put in right here at basically at the scene of the crime of the non-farm payroll, 94.50. So I think we're going to get a rotational day today. I think we're going to see both sides of. I think if we can get back above that 97.75, we'll pop our heads back into 2000s again. But this was, a big spike in sell-off. So this was met with a lot of responsive sellers up here on the news. So let's take a look at what it looks like structurally. Obviously, this is a RTH, so we're not seeing the Globex spike up into the 2002. Why did we fail up there? Well, we have major price rejection here at 2003. They took her right back down. We're back below this distribution zone around the 96.75. We're testing this 91.75. It was 92. It's shifted to 91.75. Our open, our close naked gap is right here at 91. So we're likely going to challenge that. So 87 was our low of the night, and you can see that we had this target, and I talk about this all the time, where we had fallen out of balance. Let me just bring this in. We had fallen out of balance that we were in for quite a while up top here in this microcomposite. And then when they fell out of balance, they tried to hold value here at the 87.50. Then they gap down. We go down and we create this balance zone here, and then they break out, they find value above, and they go into price discovery. Where do they go? They go right up to that 87.50. So when the people are asking why I was targeting that 87.50, it's where the buyers and sellers were trying to hold value before. So if they're in price discovery, where are they going to move to? They're going to move up where the buyers and sellers liked it in this area before. Simple auction logic. Now this looks a little bit convoluted, and I went over this last night. The 3-day microcomposite gives balance at 77.50, fair value 77.50. The 2 days that we popped up, the first was down here at 74.25. So it looks a little weird the way I've got it drawn, but if I just take the 2-day off, let me just do this. So if I just take the 2-day off, the 3-day where we had part of each day trading, the most traded price is 77.25. That's or 77. So that's important for me to know. But I also want to know that when they first got up here on these 2 days, the breakout day, where that value was first, and that's down at 74. Because if I know that they don't come down to 77 and find buyers and rotate, I know what the next destination is going to be. It's going to be down here at 74. Didn't find enough buyers with conviction at 77. Let's check the next area at 74. Basic auction logic. Now I can draw this two ways as well. I can take this profile and take the breakout day out and draw a profile like this on these 2 days, because we're more in balance these 2 days, and it gives me the exact same information. I'll group it because we're likely going to come back down, and I'll end up adding this candle anyway, because we're probably going to come back down here and chop around in here at some point in time if we fail to hold above this 2003.25. So just a little bit of a mindset. So right now, 91.75, 92 is going to be our key trading area. It's the range high basically from yesterday, but it's also CLVN. Below this, I'm looking short into 87.50 again and move down to the 81.50. If 81.50 doesn't hold, then my two main targets below are going to be down here at 77 and 74. With 70, and then our key line in the sand below is 67.75. And if we don't hit 67.75, I'd be looking to come down to the 50% of the significant breakout candle, and that price was down here at the 1958.25. So I'll be targeting. Now I've got some intermediate targets, but the main target will be the retracement of the 50% retracement of the significant breakout candle. Those that follow me for a long time know that I always want to pay attention to the candle that takes us outside of balance, longer term balance, and if they can't hold value that they've accepted, once they do that, they usually will come back to the 50% retracement. And basically, it's also going to bring us back to this, intermediate microcomposite high just above that 58, up at the 61 area. So below that, I'm looking for a rotational day with a grind down towards 77 and 74. If we don't hold 67, I'm looking for a bigger give back and a move down towards the 61 and 58 and a quarter with targets at 66. 62.50. And then you've got 64.75 as well, the value area low of this 2-day. If we hold above the 91, looking for them to move back up into 96, into the 2000s, test the overnight high that was just put in at whatever it was, 2 something, and test the other side of this distribution zone. Anything above 2003, I'm looking for rule of 10 up into the 2008 and 2010 with the 2012 naked gap. So we got the rule of 10, we've got the naked VPOC at 08 and a quarter, and then we've got the naked VPOC, the naked close at 2012. Next major resistance comes in at 2017.50. The reason why? 2017 and a quarter. 2017 and a quarter is the developing value area, or not the developing value, the value area low of the microcomposite of the balance that we fell out of. So we'll probably get some responsive sellings. Above that, we've got this gap zone that will need to be cleared, and with the naked close all the way up at 36. And one thing I'll be watching is this 25 area, because that's the microcomposite LVN of this distribution zone right here. It's a double distribution on this microcomposite. So inside of value, look for a break above that 17, but be careful right here. You could get some major resistance, and if we get above the 25, a pop up into that naked close the gap in the space and close the gap in the close, and then 43 and 55. The most traded price once we're back into this balance area is all the way up here at 2073. So if we get back inside of balance and above this 25, don't be surprised if we get continuation. The most traded price going all the way back to the beginning of 2013, January 3rd, 2013, is still up here at 2070, the composite VPOC. So just be aware of that. Again, this is way outside of today's trading range. I'm just trying to give you a better idea of context where we are. So let's take a look at the overnight. I know I'm running long. So far, our overnight, other way around. Our overnight low is down at 87. Our overnight high is 2002 and a quarter. Our VPOC could possibly shift, but right now it is at 1990. And we're trading 92. It's a pretty balanced profile except for the little pop. We've got an LVN right here at 95.75. That is our weekly ATR, basically one tick above our weekly ATR. Our weekly ATR has already been tested. Our week open is at 1943. Our weekly ATR is 74,825. So our critical mass for the week is at 2,000. And how beautiful is this? Our critical mass is at 2018. It's at 2017, 82. Ah, why that happens? What? There we go. Why am I watching the weekly critical mass? Well, if we get up here, we're in our last day of the week. If we get up here, we're breaching a key area and we're breaking critical mass. This could turn into a major trend day if we get above this 1775 area. I don't think it's going to, kick in today. If anything, I think we reject this area if we do get up there. I think we're going to have more of a rotational day with a peak inside of 2,000, and it'll be interesting if we hold 2,000. So in terms of trade levels, 92, targeting 95 and 96, 97.75 will be a key. I'll get long above 97.75 to go into the 2000s, take out the overnight high, test the 03 and a quarter. If we get above 03 and a quarter, it's all going to be about 08 and a quarter. And 2010, there's an intermediate target at 550. And then above the, let me just bring in my, above the 10 and 12, we've got possibility of resistance at 13 and a quarter. And then 17, and then our daily ATR, which is running at 35.69, off of the bottom at 1987, our daily range puts us within this 2022.75 area with a break of critical mass and back into that longer term balance. So we get above 17, I'd be 17.75. I'd be very reluctant to want to try to fade a move up there because you're probably looking at a continuation trend day. Don't think it's going to happen. It's not my main hypothesis. My main hypothesis is to either break below the 91.75 and come down to the middle of this distribution, down in around 83. We've got the value area. The value area low is at 85.50. Our overnight low is at 87. There's this LVN right here at 88.75. I'm going to use that because if we break that, I got a nice target to get funded at the 87. A lot of volume went through at 87.75 into the close. And then if we can't hold the 85, I'd be targeting the 82s and the move to the VWAP, and below that a move to come down here and take out that 77, come down to the most traded price in the last 3 days. And if they can't hold that, come and test the value area low and take out the naked VPOC and test the second. No, that's not. I want to have this encapsulated. I will be looking for buyers down here. If we come down, get into the lower distribution, come down, test the lower distribution, find the buyers between 77 and 74, and bounce to work our way back up towards the 2000s. If we fail, look for them to come down to the 67.75, and that is now our key line in the sand. I'm going to reverse this. Below the key line in the sand, I'm looking for this move and a bigger move down back into the 52 and 49 area. 64.75 with 58 as the come on. %50 of the significant breakout candle. Okay, so that's going to complete our pre-market session. Sorry, I'm not going to do gold this morning. I went long because of non-farm and because it's a lot to talk about with this move to give you context of what I'm thinking. Right now, we're above the 91.50. I'm looking for them to come up into the 95.50, 96, and test this 97.75. There, I'll be looking to see if they have responsive sellers between here and 2000, trying to hold below the 2000s for a rotation back towards the gap fill and the overnight low and test the value area and the middle distribution from yesterday. If we see initiative buyers stepping in and we get an open drive, we're going to get an open auction out of range, and they just go up and break above 97.75, then I think you probably see the overnight high get taken out and a move into these upper targets. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. All right, I'm going to